Today, silver remains one of the most talked about commodities in international financial markets, and the attention it is receiving is not accidental. Across global trading hubs, silver prices continue to reflect strong underlying demand, tightening supply conditions, and growing awareness that this metal is no longer just a secondary precious asset. Instead, silver is increasingly being viewed as a strategic material essential to modern industry, energy infrastructure, and long-term monetary protection. In global markets, silver has been trading near elevated levels compared to recent years, holding on to gains that many previously believed were unsustainable. What makes today's situation different is the combination of factors supporting these prices. Unlike past rallies driven mainly by speculative interest, the current environment shows strong participation from industrial buyers, long-term investors, and even governments focused on securing supply chains. This multi-layered demand has created a stronger foundation beneath silver prices, reducing the likelihood of a deep or prolonged correction. One of the most important stories shaping silver news today is the growing imbalance between physical supply and consumption. Global silver production has remained relatively stagnant, with only marginal increases over the past several years. This is largely because most silver is produced as a byproduct of mining other metals such as copper, lead, and zinc. As a result, higher silver prices alone do not immediately translate to increased output. Mining companies must respond to conditions in their primary metals first, which limits silver's supply elasticity. At the same time, demand continues to grow steadily and in some sectors rapidly. Industrial usage accounts for a significant portion of annual silver consumption, and this share is increasing. Solar energy remains one of the largest drivers, as silver is a key component in photovoltaic cells. Despite ongoing efforts to reduce silver usage per panel, the overall expansion of solar installations globally has more than offset those efficiency gains. Countries accelerating renewable energy adoption are effectively locking in long-term silver demand. Electric vehicles represent another major source of silver consumption. Modern EVs require more silver than traditional internal combustion vehicles due to their complex electrical systems, power management components, and onboard electronics. Beyond vehicles themselves, the charging infrastructure required to support EV adoption also relies heavily on silver-based components. As governments continue to promote electrification, this trend adds further pressure to already tight silver supply. Beyond energy and transportation, silver plays a critical role in electronics, medical devices, water purification, and advanced manufacturing. Its antibacterial properties and high conductivity make it difficult to replace without sacrificing performance. While some substitution is possible in limited applications, widespread replacement remains technically challenging and economically inefficient. This reality reinforces silver's strategic importance in modern economies. Investment demand is another key element of today's silver story. Investors across the world are increasingly turning to precious metals as a hedge against inflation, currency depreciation, and financial instability. While gold traditionally dominates this space, silver has been attracting renewed interest due to its relatively lower price point and higher potential for percentage gains. Many investors view silver as lagging gold historically and see current market conditions as an opportunity for silver to catch up or even outperform. Physical silver demand from retail investors remains strong in many regions. Premiums on coins and bars continue to reflect tight availability, particularly during periods of increased buying interest. This physical demand is important because it removes metal from circulation and reduces available inventory. Unlike paper contracts, physical silver purchases require actual delivery, which directly impacts supply balances. Institutional investors are also playing a role. Hedge funds, asset managers, and commodity-focused funds have increased their exposure to silver not only as a precious metal, but as a proxy for global industrial growth and energy transition trends. This broader investment narrative has helped silver attract capital that might otherwise flow exclusively into base metals or technology-related assets. Another major theme in today's silver news is the growing divergence between paper markets and physical reality. Futures markets continue to offer high liquidity, but concerns persist regarding the actual availability of deliverable metal. Inventory levels at major exchanges have declined, and reports of silver moving out of traditional storage hubs have fueled speculation about long-term structural stress. While paper markets function efficiently in normal conditions, prolonged physical tightness can eventually challenge confidence in pricing mechanisms. Geopolitical factors are also influencing silver markets today. Tensions in key mining regions, disruptions to global shipping routes, and evolving trade policies all contribute to uncertainty. Because silver supply is geographically concentrated, any disruption in production or transport can have immediate effects on global availability. These risks encourage both industrial users and investors to secure supply proactively rather than rely on just-in-time procurement. Macroeconomic conditions further support silver's strength. Inflation concerns remain persistent across many economies, even as central banks attempt to stabilize prices. Interest rate expectations continue to fluctuate, and uncertainty around future monetary policy adds to demand for tangible assets. Silver benefits from this environment as both a hedge and a growth-linked asset, bridging the gap between traditional precious metals and industrial commodities. Today's silver market is also influenced by shifting perceptions. For many years, silver was often dismissed as too volatile or secondary compared to gold. That perception is changing as market participants recognize silver's essential role in emerging technologies and infrastructure. This shift in mindset is important because it affects long-term investment behavior and valuation models. As international markets digest these developments, silver remains highly sensitive to news, data releases, and policy announcements. Volatility is likely to remain a defining feature, but volatility built on strong fundamentals rather than pure speculation. Each pullback has so far attracted buyers, suggesting that confidence in silver's long-term outlook remains intact. The global silver market today is not defined by a single narrative, but by the convergence of multiple powerful trends. Industrial growth, energy transformation, investment demand, and supply limitations are all interacting simultaneously. This convergence creates an environment where silver's importance continues to rise, drawing attention from sectors that previously paid little attention to the metal. As today's silver market continues to unfold, another critical aspect drawing attention is the widening gap between regional pricing and availability. In several parts of the world, silver is no longer trading as a uniform global commodity. Instead, local market dynamics, regulatory decisions, and logistical constraints are beginning to shape prices in ways that reflect regional realities rather than a single international benchmark. This development is especially important because it highlights how physical supply pressures are starting to override traditional paper-based pricing structures. In Asian markets, silver has shown signs of trading at noticeable premiums compared to Western markets. This reflects strong industrial demand, growing investor participation, and concerns over future supply access. Manufacturers in technology, electronics, and energy sectors are increasingly focused on securing long-term silver supply agreements, even at higher prices, rather than risking shortages that could disrupt production. This behavior reinforces upward pressure on prices and contributes to regional imbalances. Policy changes are also playing a role in today's silver news. Governments are becoming more aware of silver's strategic importance, particularly as it relates to clean energy, defense technologies, and advanced manufacturing. In response, some countries are reviewing export policies, refining regulations, and domestic stockpiling strategies. These measures are not always announced loudly, but their impact is visible through tighter availability and shifting trade flows. As silver becomes more strategically valuable, its movement across borders is increasingly influenced by political considerations rather than purely economic ones. Another major factor influencing silver today is the situation within global commodity exchanges. While futures trading remains active and liquid, the underlying physical inventories that support these contracts continue to face scrutiny. Market participants are paying closer attention to inventory reports, delivery notices, and warehouse movements. The steady decline in readily available silver has raised questions about how long current systems can function smoothly if physical demand continues to outpace supply. This concern is particularly relevant for industrial users who cannot rely on paper contracts alone. Manufacturers require physical silver for production, and delays or shortages can have immediate operational consequences. As a result, some industrial buyers are bypassing traditional exchange mechanisms and sourcing metal directly through private agreements. This shift reduces the amount of silver circulating within exchange systems and further tightens available supply. Investment behavior today reflects a growing understanding of these structural pressures. Long-term investors are increasingly focused on silver's fundamentals rather than short-term price movements. Many see silver as underrepresented in portfolios given its critical role in the global economy. This perspective is contributing to a steady flow of capital into silver-backed investment products and as well as increased interest in direct physical ownership. Retail investors continue to play an important role in shaping today's